Imagine this. The very reason banks panic when too many people try to withdraw their money at the same time, why governments impose withdrawal limits during crises, and why you can't actually withdraw $1 million in cash even if your account shows it. All of this has a very specific cause, and it's the dirty secret no one in finance wants to admit. The money was never really there. The amounts the system claims to exist do not. And the entire modern economy is built on a belief in wealth that nobody truly owns. Welcome to Chronicles of Finance, a place where the hidden secrets of money, banking, and the economy are revealed. Subscribe if you dare to see the truth they don't want you to know.
The illusion of ownership.
You look at your bank account. There's a number on the screen. That's your money, right? You earned it. You deposited it in the bank. You see it on the screen. It's next to your name. But there's something no one tells you. That number, that money doesn't actually belong to you. Not legally, not technically, not in the real sense of ownership. And once you truly understand what happens when you deposit money in a bank, the entire financial system looks very different to you. Most people live their whole lives thinking they own their money. They feel it. They plan around it. They stress about it. But is feeling something the same as actually owning it? Modern economics exists precisely in that gap between perception and reality.
What is a bank account really?
Let's start with what you think it is. You walk into a bank. You hand over cash. They store it somewhere safe. When you need it, you get it back. Simple, right? No, not at all. When you deposit money in a bank, you are not storing it. You are lending it. The bank does not owe you your money. It owes you money. The same amount, yes, but not the specific bills you handed over. Legally, you are a creditor. The bank is a debtor. Your account balance isn't a vault. It's a certificate, a debt note. Stop for a moment and think about that. You are not a customer safeguarding your property. You are giving up ownership in exchange for a promise, and promises can fail. So where did your money go? The bank has already lent it to someone else. That person spent it. The money moved, and it disappeared. Do you know what that means? The number on the screen is just that, a number, a placeholder. You are betting the bank will get it back from someone else and give it to you. Most of the time, the bet works, but not always.
When does money stop being yours?
Banks impose withdrawal limits. Have you ever wondered why? Your account shows $1 million. Can you walk in and take it all out in cash immediately? No, you have to request it first and wait. Sometimes you even have to explain why you want it. Why? Because the money isn't there. It never really was. And what happens if many people try to withdraw at once? The system collapses. This is called a bank run. During a run, banks lock their doors. They freeze accounts. They set daily limits. They tell you, you can take some of your money, not all, not now. And the most unsettling part, it's legal. Governments may declare banking holidays during crises to protect the system. Your access is temporarily restricted. The aim is not to punish you, it's to protect the system. If everyone could take their money at the same time, the entire structure would crumble in hours. But don't worry, your money doesn't vanish in such cases. The number on the screen stays, you just can't touch it. So if you can't access that money, is it really yours?
Value is not controlled, access is.
Here's where it gets interesting. During a freeze, the money's value doesn't change. The economy doesn't erase your account. The bank hasn't taken your assets. Yet you can't use them because money is not about value, it's about access. And access is controlled by institutions, banks, governments, payment systems, credit card companies, central banks. Every transaction passes through a gate. Every transfer requires approval. Every withdrawal is monitored, not because the money isn't yours, but because the system needs to control the flow. Imagine this. You own a car, but every time you want to drive it, you need permission. On paper, it's yours. But in practice, is it really? You don't have control. A bank account is the same. Theoretically, you own the value. Practically, someone else controls your access. And the most important thing isn't value, it's control. Money works only as long as it moves. But do you get to decide when it moves? Think about it. Whoever holds the power also grants the permission.
The system needs you to believe.
Why doesn't everyone know this? Because the system runs on belief. Money works as long as trust exists. Banks operate as long as people don't demand all their money at once. The economy functions as long as we believe the numbers on screens represent real wealth. And that belief is fragile. This illusion collapses not because the money disappears, but because trust does. Historically, all financial systems have relied on one thing: certainty. Certainty that your money is safe, certainty that it will be there when needed, certainty in the institutions holding it. What matters isn't whether that certainty is justified. What matters is that you believe in it. That's why the system is designed to prevent questioning. It wants you to assume ownership and access are the same. Schools don't teach what a bank account truly is. Media doesn't explain creditor relationships. Banks use words like account and balance to give the illusion of ownership. Legally, you are lending. Ownership is waiting. The system doesn't hide this. It just discourages you from asking. And there's a reason for that.
The question that changes everything.
At this point, you don't actually own your money. You gave it to an institution that lent it to someone else. You can access it only as long as the system allows. Access can be restricted, delayed, even frozen. Most importantly, it's all legal. This doesn't make the financial system bad. It simply is what it is. The structure is built on agreements, permissions, and trust. But once you see it, you can't unsee it. If your money isn't truly yours, what do you really hold? A promise? A number on a screen? A belief that it will be there when needed? And if ownership is only access, and access is only permission, then who really holds the power? Is money a tool under your control, or a leash held by someone else? Because here's a truth no one wants to say out loud. If the illusion of ownership keeps the system alive, who benefits from you not questioning it?